Investors gearing up for yet more earnings this week. And there are signs of progress in the relationship between the U.S. and China on trade. But the U.S. government shutdown is dragging on. Let's get more from Richard Croft, Chief Investment Officer at Croft Financial Group. Richard, haven't talked to you for ages. Thanks for joining us.
I was going to say the same thing. You're looking well, Andrew.
Oh, thank you. You're looking amazing. Talk to us about the market. What are you paying most attention to right now in equities, Richard?
Well, clearly the earnings season is on us, so I think that becomes the primary thing to look at right now. And earnings in the U.S., to me, the way I see it, are still being driven by artificial intelligence. The big tech companies are the ones that are driving the performance. So far, the numbers have come in better than expected, but that's not surprising. Most company management tends to talk down their numbers before the release anyways. Mm-hmm. But they were less than, in a lot of cases, less than the whisper numbers, which is why you've had some interesting volatility in a lot of these big tech names. I would encourage investors, though, one of the things that I found interesting this week was Amazon. Amazon reported a much better than expected number, particularly as it related to AWS and the growth in that area. And one of the things investors want to keep an eye on is when they're looking at these numbers, when they come out after the market, is if they can tune into the follow-up analyst call. That can be very important, or at the very least, listen to BNN or all the other newscasts to see what came out of those conference calls. Mm-hmm. One of the things that Jassy said is that the slowdown in AWS, which was one of the issues in the last earnings report, not this one that just happened, is that it was constrained by supply. In other words, they didn't have enough supply to be able to meet the demand that was there. And supply on a company the size of Amazon is something you can overcome because they have the capital to be able to do it. They were able to do a lot of that in this quarter, which is why AWS did very well. But Amazon took a downturn after the previous earnings call on the back of AWS's slow growth. Mm-hmm. But if the growth is the basis of supply, then that would have been a time to take a look at buying into the company. And this is a company has so many levers to pull that I think it's going to be one of the surprise winners, probably one of the better winners over the next year.
Yeah, that's interesting. So he was indicating, Jassy, the Amazon.com CEO, that he could grow even faster in cloud services if he could get the mainframe or the computing power and or the energy.
Yep, that's the issue. And that's the thing. The energy in particular is something you don't solve overnight. That takes time. But the fact that it turned around very nicely in this quarter, I think, speaks volumes to that, and that's going to continue. And that's probably going to be one of the driving forces, particularly in the U.S. market. Raw materials, I think, are going to be beneficial to the sale of raw materials, and the use of those rare earths and things like that are probably going to be pretty good for the Canadian market. So I'm mildly bullish, despite the fact that Berkshire seems to be raising a lot of cash, and there's certainly concern from that company in terms of where things are going.
You, though, and other observers are keeping an eye on this circular investment trend where, for example, NVIDIA will buy into a company, invest heavily in it, on condition that that company buys NVIDIA devices. And that kind of magic roundabout in financial markets has been known to fall apart in the past.
That is probably one of the more interesting things that's occurring in the current space, and that tends to happen after you've had a very strong growth trend in the market, and it particularly implies here because you need to raise so much capital in order to be able to do the back testing and be able to do the training of these generative AI models. But you're absolutely right. Oracle became the poster child of that in the last earnings report when it blew out numbers that were not anywhere near where analysts had thought they were going to be. I mean, they were remarkable growth. And they talked about a backlog of orders, but the backlog of orders was based on the premise that OpenAI was going to use the services from Oracle, among other companies, because they need that, the learning capability. They need a lot of these data centers. And Oracle has to go out and build those data centers, which means they have to raise money in order to do that. So OpenAI is paying for that, covering the cost. It affects Oracle's balance sheet, but it's very positive for the income statement. The issue that OpenAI has, as long as they can raise money, then this circular financing tends to work. But the problem you're going to face down the road, I think, is at some point people are going to question whether or not further equity investments in OpenAI are going to be justified to the extent that they are now, because that's a $500 billion valuation on that company today when they raise new money, and that's in the private market. The other piece of this, which I find interesting, is a lot of the debt that is being raised to finance some of this stuff, certainly from the smaller companies, is being raised in the private markets because there is so much capital floating around. So we're not really getting this, the kind of transparency that I would like to see in terms of how the level of debt is going to impact the broader economy as we move forward. Because in the public markets, you can see that in the spreads between junk debt, for example, or corporate debt and government debt. You're not seeing that so much in the private sector. And where we're seeing defaults in the high risk bonds, you're seeing them in the private markets right now. And that's starting to pick up a little bit. So there's some nervousness around that, but it's all based in many cases around this loop we're just talking about.
Richard, thank you very much indeed for joining us.
Good to see you.
Richard Croft, great to see you. Chief Investment Officer at Croft Financial Group.